Welcome today our speaker, Doug Laney, who is going to be telling us about the case for the Chief Data Officer. I'm also joined today by some other folks from IRMAC. We've got Nick, our Director of Online Content, who is going to be monitoring the chat for your questions and relaying them to Doug. And also Deborah, who is our Programs Director, who is going to be facilitating the discussion and will provide a bio of Doug's bio shortly. But before we begin that, I do have to give a acknowledgement to our sponsors. First San Francisco Partners has supplied us with the resources we need to continue to bring you these streams on YouTube and to make these and to put you in touch with these fantastic content and bring you fantastic speakers every month, which is very exciting. And we also receive sponsorship from InfoSet to help us with our communications. And I also do want to just plug again our website, irmac.ca, where you can find out more about our events and see other resources and opportunities. So without further ado, I'm going to pass it off to Deborah to introduce you to Doug Laney.
Yeah, thanks, Eden. So I'm Deborah Henderson, again, Program Director for IRMAC this coming year. And I have the pleasure to introduce Doug Laney, who is a person in our industry who really needs no introduction. He is a best-selling author and recognized authority on data and analytics strategy. He advises senior IT, business, and data leaders on data monetization and valuation, data management and governance, external data strategies, analytics best practices, and established data and analytics organization. His book, Infonomics, How to Monetize, Manage, and Measure Information for Competitive Advantage, was selected by CIO Magazine as a must-read book of the year and top 5 books for business leaders and tech innovators. And personally, I highly recommend this book as one of the most current and in-depth and important books that you might want to get involved with this year. Currently, he's now a Data and Analytics Strategy Innovation Fellow with the consulting firm West Monroe, and was previously Distinguished Analyst with Gartner's Chief Data Officer Research and Advisory Team. He's currently with co-chairing the annual MIT CDO IQ Symposium, and is visiting professor at Carnegie Mellon University's Heinz College, and is a member of World Economic Forum's Data Exchange Initiative and sits on various technology company advisory boards. Welcome, Doug. Today, he'll be talking about the business case for a chief data officer. This session will share eye-popping findings and analysis from Mr. Laney's study of hundreds of organizations with and without a CDO. The study examined over 500 organizations to determine how businesses with a CDO operate differently. So without ado, please welcome, and I'll pass this session over completely to Doug.
All right, thank you, Deborah. Good morning. Still here from Chicago, just a few blocks away from Wrigley Field, where the Chicago Cubs play. Thank you to IRMAC and the sponsors for the opportunity to speak with you today. I know we're all looking forward to resuming in-person events as soon as possible. And so anyway, thank you all for joining us today online. I hope, of course, that you and all of those you love are keeping safe and well still. So let me skip forward here. And as any good, there's a little screen issue here. Let's do that. There we go. As any good scientist knows, and any good data scientist should know, most discoveries begin with a hypothesis. And so we see a lot of surveys about data scientists that have to do with their role, but don't really have much of a point to make or a real question to ask. So I kind of took a different approach. I wanted to find out whether companies that have chief data officers, CDOs, operate differently than other organizations. I wanted to know if these organizations benefit in any way, what kind of different behaviors they exhibit, and ultimately what is the CDO really making a difference? I think I'm going to change some display settings here to make this easier. Okay. So it's easy to kind of lay out the the job and the various responsibilities of a CDO, but it's proven difficult for many organizations to make the business case for one in the first place. The findings that I'm about to share with you come from surveys of over 500 organizations to date. We're running a continuous study also to look for changes over time, and I'll perhaps share those later on in the year, or maybe next year. So I'm really not the first one to tell you that correlation doesn't equal causation. Therefore, I'm only going to share with you findings where there's an extreme difference in organizations that have versus those that don't have a CDO. One might ask, is it reasonable to assume that someone other than the CDO is driving these data-related improvements in a company that has a CDO, or that companies already exhibiting these kinds of behaviors are the ones that hire CDOs? Well, in my experience, no, neither of these is very likely. So, come to your own conclusions about how strong a business case these findings are. I think it's a pretty good one, especially when we combine this kind of empirical data with our own, reasoning about the role. First, let's take a look at the enterprise as a whole. Everyone talks about becoming data-driven, but do they and their organizations really embody or embrace this at an enterprise level? When we talk about corporate strategies, we find that only about 50% of organizations even make mention of the importance of data and analytics. Almost all strategies make mention of the importance of the company's or the organization's core assets. Of course, their financial assets, their production of goods and services that they deliver, and even they make mention of their human capital. These are all things that show up on the financial statements, but what doesn't? Data assets. As I've discussed and written about over the past decade, data is not yet considered a balance sheet asset by current accounting standards, and data is not even fully acknowledged as property by the law and by the courts. Therefore, it's easy to understand why it's being overlooked in annual reports. But some companies get it, not that they quantify the value of their data as an actual asset, but that they understand its value at some level and find it worth featuring as part of their corporate strategy. Now, is there any difference in organizations that do consider data and analytics as part of their enterprise strategy versus those that don't? It seems it's not just lip service. These businesses and other organizations claim to make significant use of their data 3 to 4 times more often. This is not 3% or 30%. This is 300% more often, at least. Vision starts at the top, and it doesn't get much higher than those putting their names on the annual report or the corporate strategy. So, and then we ask, okay, so who's involved in driving these high-level strategies, mentioning data and analytics? It seems to be the CDO, but of course, we're talking about data and analytics to shareholders. Isn't really the same thing as actually doing it. So what does doing data and analytics entail? Many CDOs and other data leaders talk about transformation. We're transforming our business, our relationships with customers and suppliers. We're transforming our products and services, or even transforming the market itself. So let's look at the top 3 ways that organizations say they're using data and analytics for transformation. Primarily, they're using data for strategic insights and decision-making. I suppose one can debate whether that's transformative in and of itself or not. 30% say they're using data to improve business performance. Well, I suppose that the degree to which you're improving business processes could be transformative if you do it well. That is, if you integrate data and analytics into your business processes themselves, typically with the help of some kind of AI or automation. Next, we see a scant 17% say that they're truly transforming the business processes, products, and services with data. I think further study would reveal what those use cases are, but over the years, I've compiled over 500 real-world examples of organizations using data and analytics for innovative high-value purposes, many of which truly are transformative. And in fact, my next book that I'm working on should be out sometime, hopefully this summer, early fall, early autumn, is a compendium of these use cases. So just by way of a few examples, there's the University, Wichita State University has transformed the way it accepts applicants, not necessarily based on grades and scores and interviews, but rather by matching particulars about the individuals, the personas and other factors with the program's course requirements and curriculum. This has led to fuller courses, greater student success, and higher revenues for the university. Or Vestas, which builds and installs wind turbines, they now use supercomputing-based forecasting models that take into account over 200 variables and 20 plus petabytes of weather data to identify precise optimal turbine placements within a 10 square meter grid versus previously a 27 square kilometer grid that was only possible previously. They can now determine the placement, optimal placement in 15 minutes versus over what used to take 3 weeks previously. Or consider the city of Malmo, Sweden. Its police department reduced 9 months of manual analysis of crime data, such as communication behavior from phone calls in combination with crime statistics, weather, day of week, city events, and 500,000 interrogations, down to just 3 minutes of automated analysis, and actually helped them identify and locate a serial killer some years ago. So it's no surprise who's the typical culprit behind these kinds of transformations. It's the chief data officer, but not just any CDO. We recognize that there are kind of two main classes of CDO. One who acts in a more consultative capacity, developing data strategies and initiating data governance efforts. This CDO more frequently reports to the CIO or maybe the COO. The other class of CDO is an actual executive who's truly responsible and accountable for all things data in the organization, often reporting to the CEO or at least with a spot on the executive team. We find that fewer than 40% of CDOs are in this category. However, in organizations with this kind of executive CDO, the one with the resources, the influence, and the authority, we find that they are about 4 times more likely to be using data to transform the business. But what about organizations where the CIO remains the ultimate person responsible for the company's data assets? Well, in these kinds of companies, they're less far likely to be doing advanced analytics. Why? I believe this is because organizations without empowered CDOs, things like data quality and availability, continue to be a significant impediment to analytics. I see some questions coming in. I'm going to try to maybe weave them in, but possibly address them at the end. So thank you. Keep the questions coming. So data democratization rolls right off the tongue, doesn't it? We often hear business and leaders talk about democratizing data, but what does data democratization really mean? Many of you, I'm sure, know Bernard Marr. I think his succinct definition is as good as any. It's that everybody has access to data, and there are no gatekeepers that create a bottleneck at the gateway to the data. And this requires that we accompany the access with an easy way for people to understand the data so that they can use it to expedite decision-making and uncover opportunities for the organization. Ultimately, the goal is to have anybody use data at any time to make decisions with no barriers to understanding. But if the goal is for data to be shared freely throughout the organization, it first has to be considered an asset, not just talked about as one. Unfortunately, the study indicates that fewer than 20% of companies really treat data as an asset, yet here we are in the midst of the information age or the data economy, and everyone knows the power of data, but still the vast majority of companies are sitting in the 20th century and haven't made the necessary cultural shift. It shouldn't be that difficult. Most companies follow a strict asset management discipline for their other assets, their financial assets, their physical assets, and even their human capital. So why can't we adapt these standards, frameworks, and procedures toward the management of information assets? Again, perhaps because data is not a balance sheet asset, or maybe just because we IT folks just love inventing new methods more than we do adapting existing ones. So there's plenty of asset management principles and practices that we can and probably should be adapting for our organizations. Again, it's no surprise we see organizations
Sorry to interrupt, Doug. Is there a second slide? Because we've been watching for the Chief Data Officer and just double checking if.
I've been skipping ahead the slides here.
Oh, we have just been seeing one slide this whole time. I'm so sorry to.
That's somebody should have told me that like 15 minutes ago.
I thought it might have been
the slides and sharing them, so I'm not sure what's happening.
Apologies. Then we'll get that sorted out.
Okay, let's. I'll reshare and we'll do it again here. Okay.
Okay, we can see this slide. Can you try going back and forth real quick? And we can just
perfect.
It's working now perfectly fine. I had no idea what was going wrong before.
All right. There we go. Okay, let's see where I was. I think we're talking about this. All right, so yeah, I think I was here. So I'm saying it's no surprise that we see organizations with CDOs being 3 times more likely to be sharing data freely among individuals and departments than those with no CDO. I don't know how else you're going to establish the necessary kind of mandates and policies and procedures and make the cultural shifts. I'm sorry, it's just not going to happen with only a CIO and a director or manager level head of data warehousing. Are we skipping all right now?
It's looking great from our end.
Okay, great. So we've talked about culture change being one of the major drivers of becoming a so-called data-driven organization. The build a data warehouse or data lake and they will come approach really just hasn't been that successful, and many companies point to that as being a failed endeavor. Yet business people are craving data, and we hear this time and time again on client engagements. So let's take a look at some of the factors that are really holding them back. Starting at the bottom here is a bit of a shocker. 1/3 of those surveyed believe that data is a balance sheet asset. It certainly should be. It qualifies as one. It's owned and controlled. It's exchangeable for cash, and it generates probable future economic benefits, as accountants say. Those are the criteria of an asset: owned and controlled, exchangeable for cash, and generating probable future economic benefits. And it's separable from other assets. But alas, it's just not considered an asset, with a couple of recent rare exceptions to accounting standards. We also have a bit of a data producer-consumer disconnect, leading to data literacy issues. First, a large swath of people don't even know who's using the data they produce or what they're using it for. If you're generating data without much purview into how it's being used, you're probably not producing it in a way that makes it that usable. Moreover, if neither you as the producer of data nor anyone else are cataloging and describing that data, then it's not discoverable or understandable or really trustable. Finally, we see some growth in the adoption and training of analytic tools beyond spreadsheets the past couple of years. But again, this isn't really where it needs to be for an organization to even approach being data-driven or optimizing its use of data and analytics. So this quote isn't really from our study. It's from our experience at West Monroe. Of the dozens of companies that have approached us about establishing data literacy programs this past year, every one of these requests and conversations were exclusively from and with the chief data officer, not CIOs. Sometimes maybe sometimes the CEO, but this isn't to say that achieving high levels of data literacy or data fluency throughout a company isn't possible without a CDO. It's just that we don't see it happening at all. So assuming it takes a CDO to get these kinds of programs underway, would you really want to forego a concerted effort in a fast digitalizing economy like this? I certainly wouldn't. Now to one of my favorite topics, data monetization. Most of my work the past several years has been helping businesses to develop new and innovative value streams from their data. Now, this doesn't necessarily mean selling their data, but rather deploying data in a variety of ways, internally and externally. Remember, as I've long argued, data is not the new oil. Data has unique characteristics that oil doesn't have. The data is what economists would call a non-rivalrous, non-depleting, regenerative asset. That is, you can use it simultaneously for multiple purposes. You can use it over and over. And when you do use it, data typically generates more data. So companies whose leaders get this, whether explicitly or just intuitively, are the ones that clearly are winning or poised to win in the industry. So let's examine the state of affairs when it comes to generating data-driven value streams. The good news, I suppose, is that half of organizations believe they're finding ways to monetize their data externally, sharing it or selling it or licensing it to others. 10% license their data to others, and a few more exchange data in return for goods, services, or other commercial considerations like discounts. Finally, we see fewer than a third of companies say they're generating value from their data in a multitude of ways, and this aligns with other studies like those from New Vantage, which indicate that only about 12% of CDOs have revenue responsibility. Without revenue responsibility, why would a CDO make monetizing data, a priority? And you can imagine how far behind the curve any business is when they haven't figured out how to wield data, like cash. These are probably the ones with business leaders who look at the company balance sheet and don't realize they're looking at something defined in the 1930s that's largely unchanged since then, a ubiquitous document that somehow convinces them that data isn't really an asset and therefore shouldn't be leveraged as one. But here's a real eye-opener. Let's show this. Organizations with a true CDO executive are 7 times more likely to be generating cash by sharing or selling their data externally. Again, this is not 7% or 70% more. This is 700% more often. Moreover, these kinds of companies are 3 times more likely to be generating other forms of commercial value by externalizing their data. No disrespect to CIOs, but they have a thankless and insanely difficult job, but they seem to continue to either disregard the potential economic value of the company's data or just have too many other priorities like keeping the lights on and the discs spinning and the bad guys away. So when I talk about other forms of commercial value, I'll give you an example. You go into the grocery store and you scan your loyalty card, right? And you get a discount. But we know what's really happening. What's really happening is we are exchanging information about us and our purchase for free food. It's a barter transaction. We call it a discount to feel good about it, but that's not really what's happening. And so many companies are thinking about ways to share their data with others to generate forms of economic value, not just cash, but others. And there's actually a particular advantage to exchanging your data for goods and services or favorable commercial terms, and that is you avoid the tax implications. I'm not here to give tax advice, but because data is not a balance sheet asset, exchanging it for something is a zero balance sheet kind of transaction. So consult your CFO and accountant, not me on those issues. All right, let's talk about measuring data's value. This is one of the 3 cornerstones of Infonomics. One of my original hypotheses was that companies don't manage data particularly well, certainly not with the discipline with which they manage their other assets, because they're not measuring it in any way. Yeah, we get totally geeked out or got totally geeked out over big data and how big it is. My data is bigger than your data. But, we IT geeks were measuring the wrong thing. If we had paid the least amount of attention to how other assets are measured, we would have been leading efforts to measure data's various quality characteristics, its potential value, its business relevancy, its cost, its impact on business performance, its market value, its top and bottom line impact on the organization. But no, we had to fixate on terabytes and gigabytes instead. As the old adage goes, you can't manage what you don't measure, or you can't manage well what you don't measure well. And I think our failure as an industry and as a global economy to measure anything much about data, let alone the most important economic factors of data, have led to insufficient budgets and resources for doing things like data quality, master data management, metadata management, building data warehouses and data lakes, or integrating external data sources. So, so here we go. These kind of numbers are downright daunting. Think about your organization's main asset, whether it's a product or a financial investment or a service you offer. Now, in your mind, replace the word data throughout this slide with that asset. Okay, here, I'll make it easier for you. Let's do this. So now consider, if you were responsible for that asset, a product, a service, raw materials, inventory, whatever it is, and you were one of those 89% of companies that didn't know its cost basis, or one of the 88% of companies that had absolutely no assessment of that asset, or one of the 79% of companies that didn't gauge even its quality, how long would you keep your job? Probably not very long. This is what KPMG managing partner Stan Rosenthal, a friend of mine, refers to as kind of a kind of gross negligence that's rampant throughout the business world. Or imagine you're involved in a merger or acquisition, and a private equity firm or VC or accounting firm that you're working with has a due diligence process, right, to assess the value of the company that they're acquiring or integrating, and that this process completely ignores the value of the acquirees or the target company's data assets as part of that transaction. Well, this is what I found in assessing over a dozen different due diligence methodologies from household name, private equity, and accounting firms. Rather than asking these firms our clients work with, dude, do you know what century this is? I work with them to develop what I call a data diligence methodology that easily bolts onto existing due diligence approaches to measure data's potential value, its market value, its quality characteristics, and a dozen other factors of value, cost, risk, synergies, and among the two parties. Some companies have found that they're significantly undervalued once they've actually evaluated their data assets. Case in point are United Airlines and American Airlines and Delta, and I think some others. Recently, with their businesses stricken by the COVID-19 pandemic, both United and American Airlines kind of looked through the seat cushions to figure out what they had to sell or otherwise leverage to stay afloat. What did they find? Well, you think that maybe they would have collateralized their planes, but no, they're actually leasing their planes, so you can't really collateralize that very easily. So what they did was they secured multi-billion-dollar loans by collateralizing their Mileage Plus and Advantage customer loyalty programs, respectively. But catch this: the third-party appraisals of the data by the banks and actually the government itself, who participated in the loans, suggest that this data, this customer loyalty data, is worth 2 to 3 times more than the market value of the companies themselves. 2 to 3 times more than the market value of the companies themselves. United's customer data was valued at $20 billion, while its market cap at the time was about $9 billion US dollars. Similarly, American's data was valued at a minimum of about $19 billion and up to a jaw-dropping $31 billion, whereas its own market cap was hovering around $8 billion. So, the value of your company, the value of your data may be greater than the value of your company. And so you really need to start thinking about how to measure and tap that. So, CDOs may unwittingly be the caretakers of their company's most valuable asset, its data, but nobody's really going to know this if they don't measure it. I guess, you could wait till your company's on the ropes to do this, but why wait? The study found a bit of sunshine on this topic, and that organizations with executive level CDOs, ones with the actual seat at the table, are 3 to 4 times more likely to formally evaluate or valorize, if you prefer, the company's data assets. Unfortunately, without the CDO being an executive team peer of the CFO, this really doesn't seem to happen more often. And I strongly recommend that organizations, that the CDO or someone approach the CFO and say, listen, I understand data is not a balance sheet asset. We're not trying to put it on the balance sheet, but we think that if we were to start valuing data as if it were a balance sheet asset and at least create an internal balance sheet, supplemental balance sheet, it would change the behavior and drive the culture of the organization. And this is exactly what I've seen in many cases. But next, let's get on to data quality. So we discussed data quality at a high level and touched on data governance, but let's see what's the actual state of affairs here. So measuring, when we talk about measuring data quality, first we see that paltry 18% of respondents believe that data quality is a major cultural focus in their organization, and therefore leads to good all-round data quality. Again, imagine these numbers without any with any other corporate asset. Heads would roll if you were only 18 if you weren't measuring the quality of other assets, your finished goods, your raw material, your employees, anything. So a bit of a bright spot here is that 50% of organizations measure data quality to some degree. I suppose this could be simple accuracy or integrity or format checks that warrants further research. But ideally, organizations should be measuring a variety of quality factors across most data assets. And I actually list a dozen different data quality indicators in my book and how to measure them: accuracy, completeness, timeliness, scale, precision, believability, and so on and so forth. So, if you're one of the few companies that I've seen that posts its data quality metrics on big sheets of paper, or boards in the hallway, then good on you. I'm thrilled when I see something like that, but very few do. But it's terribly sad in today's world that nearly 3/4 of respondents claim that throughout their organizations, people regularly argue about whose data is right. How in a world can a company hope to execute efficiently or make consistent decisions or expediently with this kind of situation? So let's not blame data quality altogether for this. I think the sprawl of spreadsheets containing data extracts or spread marts, as Wayne Eckerson calls them, are a major culprit. So, like I said, if you don't measure it, you can't manage it. It refers as much to data as any other asset. And here we see that sunshine is truly the best disinfectant in a big way. Another interesting finding, I'm not exactly sure what to make of it, perhaps these two findings go together in some way, is that measuring data quality leads to better data quality, which makes data science much more practicable. Same here. If measuring an asset leads to improvements in managing it, then accordingly managing an asset better leads to being able to monetize it better, of course. It also seems that the qualities you're measuring matter too. Accuracy and completeness are just 2 of a dozen data quality metrics I mentioned. The others: timeliness, latency, scarcity, integrity, precision, etc. And yes, we have actually defined formulas and methods for measuring each of these. So if you're interested in measuring the value of your data or measuring its quality characteristics, reach out to me. I'm happy to share some guidance or help you out. And finally, we found more evidence that I'm still on the last one here. No, there we are. Finally, I found more. We found that a mere reliance on anecdotal data quality evidence rather than true metrics is a significant inhibitor to generating value from data. Anecdotes can be good. They certainly help present the pathos portion of the argument, but it seems that the hard numbers logos component of the argument carries more weight. Yes, I'm simply here to emphasize the ethos argument. Aristotle would be so proud. So it's probably no big surprise to any of us, but certainly this finding is helpful for making the business case for enterprise data governance and a data executive to lead it. Notice that this finding isn't just about any kind of data quality issue. It's about debilitating ones that nearly materially impair the business. And while private equity firms, VCs and investment banks may continue to entirely overlook the value of a company's data assets and the deals that they do, they probably won't do it for much longer. Investors and markets, however, are another matter altogether. Although investors, may not explicitly measure the value of a company's data assets, markets do favor data savvy companies in a big way. We found that when we looked at various financial indicators of companies that demonstrate certain data savvy or data driven behaviors, like hiring a CDO or setting up a data governance program or hiring a team of data scientists, These behaviors are becoming more mainstream for sure, but I found that these kinds of companies have a market to book value, or more specifically, for you quants, a Tobin's Q ratio that's nearly 2 times higher than the average publicly traded company. Again, we're not talking 2% or 20%, we're talking 200% higher relative valuation. And again, the causal relationship is less certain, but there's no doubt that there's something about these kinds of companies that investors really, really dig. So, and then just for good measure, no pun intended, actually pun intended, I separated out companies that make a living selling data, or where data or digital goods are their primary offering, or some kind of data derivative. Here we find that markets favor these companies in terms of their valuation by 3 to 1 over the average company. In all my years of research at Gartner and afterward, I've never found a more compelling argument for embracing data savvy kinds of behaviors or developing data or digital solutions than the need for a data executive to formulate and lead them. Finally, dozens of CDOs and CIOs I've met with say that they've started getting these kinds of questions from their boards. Let me show that here. From their boards or senior execs. My advice would be to become very prepared to answer these kinds of inquiries before they're asked. Even in chief data officer job interviews I'm coaching some individuals on, they've been hearing these kinds of questions in the form of, how would you, or how do you intend to address these kinds of questions? So in short, if your organization, let me put this here. Here we go. Yeah. So I wanted to share just a little bit of an overview, kind of a visual on Infonomics and how this all kind of fits together. I mentioned that you can't manage what you don't measure, and this is really a compelling argument to better measure information so that we can get the budgets and the resources and the support for managing it like an actual asset. But I also think it follows that any asset that you're not managing well is one that you can't monetize well, or you can't generate economic benefits from. So for many organizations, this tends to be a real vicious cycle of not measuring, therefore not managing well, therefore not monetizing their data well. And the idea behind Infonomics is really to kind of reverse the curse or flip the script. Here's a little bit about kind of what I'm up to, and a little bit about the book if you're interested. The book is available on most online booksellers. I'm happy if you're interested for you and your executive team or management team to make some copies available to you, signed copies or inscribed copies or whatever, if you like. And then just by way of wrap up, in short, if you want your organization to make data part of its enterprise strategy, to transform the business with data, to democratize data better, to raise the level of data fluency, to monetize data better, to measure data's value, not just to improve its quality and governance, to enable improved deployment of advanced analytics, and of course, impress investors, then it would certainly seem a good idea not just to hire a CDO, but hire an executive level CDO. So that's about all I have for you today. I just want to thank you all for attending, and do continue safe and well. I'm happy to address some questions. I see some that have come in, and perhaps there's some others. So let me take a look at them, take a breath, and take a look at them here. Somebody asks, how do you see the role of regulation in pushing for the CDO, emerging EU Data Governance Act and other regulations for North American eventual regulation? So I don't know, other than in government organizations, are we going to see any mandate for the role of the CDO? I believe that in Canada, there are some mandates for CDOs at certain levels of agencies in the government. But I don't know that we'll actually see it. There have been, due to privacy regulations like the GDPR, a mandate for chief information security officers, but not for CDOs. I still think that many organizations think that they can get on well enough with just a CIO and maybe a head of analytics or a head of, and a head of data. I'm obviously, you can see here, a big proponent of the role of the CDO as a senior executive. If data really is a critical asset to your organization, why wouldn't you have an executive level individual specifically aligned with that resource or that asset? I am seeing a bit of bifurcation in the role of the CIO or the IT organization. And again, I'm a big proponent of this concept of splitting the IT organization into separate I and T organizations, where technology is managed separately from data, or at least independently from data. Obviously, a lot of connective tissue between those parts of the organization and the business. But in organizations where they have separated the I from the T into separate organizations, they seem to be functioning really, really well. I don't think I can name names right now. And in some cases, we've seen where organizations say, hey, as we separated the IT organization this way, we really don't need a CIO anymore. What we need is a chief technology officer and a chief data officer. So in some organizations, they've disbanded the role of the CIO altogether. So I don't think that's a particularly bad idea, but you kind of have to be really cautious about doing it and doing it the right way. Someone else asks, will the securing of a CDO into an organization go beyond the position, but also as a commitment to dedicate funding to data initiatives and therefore enabling the growth on the data and analytics? Absolutely. However, as I said, there are two types of CDOs we see: the kind of CDO light and the CDO executive. CDO light individuals tend to not get budget or many resources, and they act more in a consultative, advisory, strategic kind of role, often reporting to the COO or the CIO. They don't really have a lot of influence or authority. The executive level CDOs, and when I talk to CDOs who are looking at these kinds of jobs, one of the first questions they ask is, am I getting a budget, right, to make things happen? And if not, probably don't want the job, unless I've never been a CDO before. But those who are looking to make a change into a new CDO role are definitely looking for budget, authority, autonomy, and actually being part of the executive team. Someone asks, how do you think about the CDOs who start with an analytics focus and without any data governance focus? Are they also successful? That's a great question. And wow, I don't know, there's a pat answer to that one. There's such a role as a chief data and analytics officer, a CDAO role, which I kind of have lumped into this talk a bit. But those who focus initially on analytics, listen, I think, and Tom Davenport and others have talked about this, you want to play, a successful CDO needs to play offense and defense, right? So the defensive part is regulations, security, data governance. The offense part is more about data enablement, accessibility, usage, driving value from data. And this, again, the successful CDOs are one who balance both the offense and defensive side of the ball. So that's kind of what I would suggest there. Somebody asks on question data quality slide 25, what's worse? I hear terms suggesting modern tech solutions solve for legacy data quality. I see. Your team suggesting modern tech. Yeah, so obviously there are technology solutions for enhancing data, for cleansing data, for deduplicating data, for data profiling, and those are all extremely valuable. But without there actually being a real initiative, a data quality initiative, and baking data quality into the culture of the organization, then those initiatives are not bound to be very, very successful at all. Moreover, a lot of those technologies are geared at solving data quality issues downstream, where it's often kind of too late. And a real data quality, enterprise data quality initiative will have a focus more on upstream, the causal effects of poor data quality. And that's where we really advise you start. Another question regarding the gross negligence around data management, data governance. Was that something written or an anecdote? I can't find the name you mentioned. I did post a LinkedIn article on it. I don't post a lot of LinkedIn articles, but it wasn't enough for like a full article. And so it is out there somewhere on LinkedIn where I mentioned that conversation that I had with him. Yeah. Again, the name is Stan Rosenthal. And I think I mentioned him by name in the article. Now I'm not sure. What do you think of creating a data marketplace for companies to post their data to other companies in North America? China has a few markets. Perhaps it already exists. Yes. Another kind of side topic, but yes, companies that are monetizing their data, one of the ways to monetize data is to put it on a marketplace. There are marketplaces for various industries, like there's marketplaces for IoT data, there's marketplaces for medical data, a company based here in Chicago called Apervita. There are generalized data marketplaces like Dowex and others. And there are other kind of emerging forms of companies that are introducing solutions to help companies create data marketplaces, not just internally, but more externally. One of the interesting stories around this was I get a call from, and I can mention this because it's public, Allstate Insurance. And Allstate, I meet with them and I meet with I think their chief data strategy officer or something like that. And he says, listen, the automobile companies one in particular wants to buy our claims data because they want to analyze what happens in accidents and so they can help them build better and safer cars. Well, great idea. It's a win-win-win for everybody. Better, safer cars for individuals, better cars produced by the automobile company, and perhaps reduced insurance rates and loss ratios for the insurance company. They said the problem is we just can't be seen as selling selling our customers' data, even if we anonymize it, aggregate it, encrypt it, redact it, whatever. Their motto is Allstate's motto is they're the good hands company, right? So that we just can't be seen as monetizing our customers' data in any way. And I said, well, this sounds like not a technology issue or a data issue, but this sounds like a brand issue. So why not take this idea off brand and create a joint venture or set up a separate company to monetize the data? And lo and behold, within 7 months, they had launched a company called Arity, A-R-I-T-Y, if you want to check it out. And it's actually a platform for any insurance company to monetize its data. And I think not just to automobile companies, but anywhere. So, again, good on them for running with that idea. Not a lot of companies. It's nice to see. Let's just say it's nice to see when a client takes your ideas.
So just to
so there
follow
are
on
a
to
variety of
that,
data marketplaces. So sorry, Deborah, go ahead.
Yeah, so just to follow on to that, why does making a new company, protect or enable the insurance industry folk to then use that data at will? That doesn't naturally follow because the privacy laws still apply.
Yeah, it's just a perception issue. Right,
I see.
for them.
I see. Okay.
They're not sharing individual customer data or names or anything like that. But what kinds of cars get in what accidents and what are the damages and things like that. The automobile companies don't care about names or anything. Maybe the location of the car or the address or some general geographic data, but no, they're not selling any PII.
No, the privacy still applies, but I get your answer there all around branding and perception, right, in the marketplace for sure.
Right.
Yeah.
So wonderful.
All right.
Anything else?
Is there anything else from your side, Nick? Oh, yes, there is one.
Oh, there we go. What about selling,
another
sharing the
question.
insights versus the data? So, yeah, I gave a class on, and I actually teach data monetization in the MBA program. By the way, the courses that I teach are also available on Coursera. If you're interested, if you just search for my name on Coursera, there's a course that's an introduction to business analytics for executives, and there's a 2-part course on Infonomics. So, but I also taught a course on through Dataversity a while ago, and one of the things I talk about is that yes, you could sell raw data, but as you aggregate it, just like any other kind of product, let's go think about another product for a second. Let's think about wheat. right? So you can sell raw wheat, right? Not a lot of use for it for me. It has greater potential use cases, but it's not in any kind of form I can really use. I want it in the form of flour, but even in flour, I still have to produce something like bread from that. And even when I have bread, yeah, I can eat bread plain, but I don't really do that. I just typically build that into a sandwich, right? So I need to bring in other outside assets to create that something that's truly consumable for me. Same thing with data. We can sell raw data all day long, and the breadth of use cases is infinite, but people aren't going to buy it if it's not really that consumable or put into a form that's consumable for them. So we can aggregate it, we can pre-analyze it, we can integrate it into their own systems. We can create custom offerings for them. So, but as we kind of move up that pyramid of more consumable, more specific forms of data, the buyers become fewer, but the price point becomes much more of a premium. So it's a decision that an organization has to make if they're getting into data monetization. The good news is, because data is a non-rivalrous, non-depleting asset, we can offer all of those. Why offer only one of them? We can offer raw data. Yeah, that's easy. Some kind of pub sub model. We can sell filtered data. This is kind of stuff like Nielsen and other data brokers do. Or we can sell analytics. Send us your data. We'll bounce it against our data. Give you some benchmarking back, or some scorecard back, or scoring algorithm like credit scoring. Or we can integrate the data that we have directly into your system, like ADP, the payroll processor. We'll take data and integrate it directly into the applications that are used for workforce management by companies. So there's a variety of ways to package data, and that's one of the things that I talk about with organizations is, all right, how far do you want to go in packaging your data to make it that much more consumable and command much more of a price premium for. So long answer, sorry, but exciting topic for me.
Okay.
All right. Anything else?
There's nothing else in the chat right now.
All right. Well, keep an eye open on it, and I'll respond after the fact here, if you like.
Yeah.
Yeah. So, what about companies that are completely virtual because all they do is share their data? Are you seeing that emerged in the market? For instance, maybe not on the product side, but on the service side?
A completely virtual company that shares its data.
Mm-hmm.
You mean a company that's created a data product from scratch, and that's all they sell? Is that what you're asking? So, well, maybe this answers your question. There's a really cool company that was launched a number of years ago called Food Genius. And what they did was they said, well, listen, restaurateurs and chefs, need to know what kinds of ingredients are trending, what kinds of dishes are trending, price points, things like that, to identify where there's white space or maybe red space in a market. And so they started scraping restaurant menu data from restaurant menus that are posted online. They also formed a relationship with Grubhub to gather data. And then they started analyzing that data, making all sorts of reports and online analytics available to restaurateurs and chefs. As it turns out, US Foods, a large food distribution company, found that data compelling enough to actually go and purchase Food Genius. They wanted exclusive access to that data. So it's an example of a company that found freely available data out there on the interwebs and built a data product for it, and ended up getting sold for millions of dollars in just a few years.
Well, I guess we see that a lot on aggregators in general. Right? Mm-hmm. Yeah. So Trivago and so forth. Mm-hmm. Yeah.
Right. There's a lot of aggregators out there. I think it's a market that's going to be ripe for consolidation over the next 5 years. Will those consolidators be folks like Google, or will they be more like Nielsen and IRI or Dun & Bradstreet? Bloomberg, remains to be seen.
Mm-hmm, mm-hmm, mm-hmm. It depends on the products and sophistication of the products that they offer as well, right?
Yeah, and how differentiating it is. And right now, the big consumers of a lot of unique data sources, unique aggregated data sources, are the the investment firms, the hedge funds, and they want exclusive asset access. So they're willing to pay through the nose for access to unique data sources that no one else has.
Right, right. And even if you're with Dun & Bradstreet or Bloomberg, you can subscribe to particular analytics from those services that,
so
that
can everyone
are
else,
particular to you,
right?
As part of your contract. And, you know, they kind of lock you in because you're paying, what, $100,000 for a particular algorithm that's important for your investment firm. I think that's very interesting.
Right. Yeah.
Right.
The interesting thing about algorithms is algorithms are actually a balance sheet asset, or can be. You can patent a business process, i.e. an algorithm, but you can't patent the data that flows through it.
Oh, that's really interesting.
Isn't that
I
odd?
wasn't
Yeah.
aware of that. Oh,
Yeah.
my goodness.
Yeah.
Okay.
So it makes things a little even more confusing.
Right, right.
Right.
Well,
Listen,
the
it's been
whole
great to-
area of monetization is just really interesting. And if we get the CDO to run with that, that's that can be very critical to a company.
Yeah.
In terms of valuation, as you said.
Well, again, for any of you who are listening, I'm happy to just speak with you. You can find me on LinkedIn and feel free to connect and further engage. I'm always happy to. So, Deborah, thank you again to you and the organization for having me today. I really appreciate it.
Well, it's really lovely to have had you here, and really compelling topics that you brought up today. And we're looking forward to white papers and more books from you. And of course, we fully endorse the Infonomics classic book that you have right over your shoulder there, as being a seminal work in this area. So thank you so much.
Thanks so much, Deborah.
And everybody, have a great day, and thanks for joining us.